Washington may soon let crypto into your 401k. Is this the next big wealth opportunity, or is it a ticking time bomb for your retirement? Why does it seem that there's such a big push for crypto this year? Who is behind all that? Is this a good idea? Are we moving too fast? Can lawmakers actually catch up? And if they catch up, can they stay on top of it? And finally, should you consider adding crypto to your 401k? I will answer all these questions, but before I dive in, we are actually witnessing nothing short of a financial revolution in this country. The situation is moving extremely fast, and these changes can make or break your financial future. So it's important that you stay informed, that you like and subscribe to this channel so that you can stay on top of breaking news. So let's get started. For years, the crypto industry has been the Wild West when it comes to investing because of its lack of laws and regulations, and also how difficult it was to enforce these laws. It became the perfect environment for criminals to take advantage of regular people. But the crypto industry has also been lobbying for years to become a legitimate investable asset class. Why is that? Because that was the dream. They wanted to have a digital currency that everybody could use everywhere around the world and not have banks and all that kind of stuff. But also, there's a lot of money to be made there. So the more money we get into the crypto industry, the more fees we're going to make, the bigger the values of these crypto assets will be. And where is a big pot of money? You guessed it, American retirement savings. About $7 trillion of these savings accounts are there and ready to invest in crypto. Up till now, retirement plans have shied away from offering these investments to their employees or their participants or their members. And the reason for this is that they're afraid to be sued. They have a fiduciary responsibility to protect the assets and the investments of their members. And if they do some kind of crazy investment in highly volatile, highly risky asset class, they're probably going to get sued. So it has to be safe, secure, a prudent investment. But as you know, lawmakers have passed new laws recently, and now we have a new executive orders that are basically opening the doors to your 401k for the crypto industry. So here's that executive order. Fiduciaries of 401ks and other defined contribution retirement plans must carefully vet and consider all aspects of private offerings, including investment managers' capabilities, experiences, and effectiveness managing alternative asset investments. They do so to protect the Americans whose retirement accounts they administer and for whom they have fiduciary duties to invest safely and prudently. There was a little bit of a concern that they would be kind of free for all, let the same crypto Wild West rules kind of apply to 401k, and everybody's going to be able to invest in crypto from any 401k in any way possible. But it sounds like they've maintained that fiduciary responsibility with the plan administrator to offer plan options that make sense, that are still safe and prudent. But here's the list of alternative assets. So there's really, it includes crypto, but it includes a lot more than crypto. It's a much broader access to private markets. Private market investment, including direct and indirect interest in equity, debt, and other financial instruments that are not traded on public exchanges, including those where the managers of such investments seek to take an active role in the management of such companies. So it sounds like you would be able to invest in a private company, a private equity, where the person that you're invested in is actually has active management role in that particular company. You also have direct and indirect interest in real estate, which is, you could have done that, you could do that today, but you have to move to a different custodian. You would have to move your 401k money to equity trust or directed IRA, and your 401k plans would have to be vetted, and the plan administrator would have to approve the moving of the funds to these alternative custodians. But it is possible. We have a lot of people that are coming from these self-directed retirement account that are investing with us in real estate. It also includes holdings in actively managed investment vehicles that are investing in digital assets, also talking about commodities, financial infrastructure development projects, and longevity risk sharing pool. I don't know what that is. So they also instruct the Department of Labor to really analyze and examine the guidance around fiduciary duties under the ERISA Act, right? So the ERISA Act is where the defined benefit and defined contribution plans are regulated. Also, reevaluate the Department of Labor's position on alternative assets and the appropriate fiduciary process associated with offering asset allocation funds containing investments in alternative assets under ERISA. Really looking at the whole process associated with offering these assets. And then also clarify the duties of that a fiduciary owes to plan participants under ERISA. And again, that's probably going to clarify also whether these plan administrators are going to be still sued for providing these assets. So they probably would have to do some kind of disclosure, some kind of education, and say, hey, you know what, we've taught you what we know. Here's the disclosure. You acknowledge that this is highly volatile, riskier asset class, and you decide to take action on your own, and we remove ourselves from all liabilities associated with that. We'll see what the Department of Labor comes out with when they reevaluate the fiduciary responsibility. Something that's also very interesting is in this article here. It says 401k plans will get more fun because so far a lot of the investments is done in stocks and bonds only, mutual funds and some ETFs. But here saying now, hey, with we can make it a lot more fun. We can do more things with our money. So it said last year they were not prudent. These investments were not prudent, but the norms have changed and now they're prudent. That's not like, it's not that private equity and crypto were volatile or charged high fees in 2024 and now there's a structural change and now they're safe and cheap. It's that in 2024 the US federal government was pretty skeptical of crypto. Now in 2025 we have a different government and they love that stuff. In fact, Trump is very involved in crypto. From first principle, it makes sense to put illiquid private assets in 401ks, right? The whole point of 401k is a long-term investment, and you're not going to be kind of like transacting very quickly on those things. The whole point of that is to put money in there and leave it till you retire, and then you shouldn't have to liquidate or do anything like that. So if you have an illiquid asset that's paying a great premium, yeah, just put it in there. The second principle is the financial industry wants to sell stuff to individual investors because they can sell more and they can charge higher fees compared to institutional investors who are pretty much tapped out, and they also negotiated lower fees. Outside of 401ks, Americans have invested in all kinds of different asset classes, like crypto, obviously real estate, far spicier asset classes than they did a few years ago. Things have changed. You could always buy stocks, but now you can buy meme stocks. You can buy zero-day options. You can have all kinds of options. Lots of more people know about these kinds of things. You can buy 10 times levered perpetual crypto futures on Coinbase. All kinds of crazy stuff. Yeah, it was led by the crypto and meme stocks and legalized sports gambling, but the general norms about what sorts of investments regular people make and should be allowed to make and is something that you should let that open to them to make these changes. But there's a much broader acceptance, of course, about all these other things, all these other investments like crypto, etc. So that was kind of interesting. So you can invest today in some crypto from your 401k. You can't hold crypto directly from your 401k account. There's a thing about the keys, who's going to own the keys and how you're going to do that. So this is a little bit challenging. But you can definitely invest in crypto-linked ETFs. So we do have, the SEC actually has approved a spot Bitcoin ETFs and an Ethereum ETF, and you're able to buy that on the stock market. You can also buy blockchain ETFs. So these are companies that are involved in blockchain technology or they're miners, etc. So there are ETFs for that hold these crypto-related companies. And then you have also some companies that are not crypto companies, but they own a significant amount of Bitcoin or other cryptocurrencies. I'm talking about MicroStrategy and Tesla, for example. They hold a significant amount of Bitcoin on their balance sheet, and but that's not their main business, their core business. And then you can do, if you want to invest in stocks directly that are crypto related, then you have crypto companies that you can invest in, like Coinbase, Marathon, Riot. So these are companies that you can invest in directly in stock market. Most plan administrator, they won't allow these kind of investments from your 401k. Things are going to change, especially that fiduciary responsibility and all of that, and it's going to become more available. But right now, they don't want to do that. They're afraid. What's the plan for getting things done and making it happen? Well, first, we've already started. If you haven't noticed, the Genius Act was kind of like Act 1, I would say, of this. Then we had the digital asset report that was done, that was published recently, and really laid out a complete roadmap for implementing cryptocurrencies and normalizing cryptocurrency across all the branches of government. Since also the Department of Labor, since May of this year, they no longer discourage plan administrator to include cryptocurrency in their plan. Before, Biden had put like a notice, put them on notice to say don't invest in crypto from the plan. Now these rules have been relaxed with the new Department of Labor. Now the SEC and the CFTC, they have to get together and figure out the classification. Are these tokens commodities, securities, or something completely different? This is something we're going to have to figure out. There's also the Clarity Act that is being worked on. We have a draft in the House and the Senate, so they're working on that. Also, the SEC launched a crypto project to modernize the regulation around on-chain assets. So this is pretty interesting. So how are we going to regulate things that for assets that are on-chain, so that you can go to Schwab, JP Morgan, and have directly own cryptocurrencies or crypto assets right into your account, your trading account. That's going to be very interesting. And the CFTC also began a crypto sprint. This is to enable spot crypto trading. So really working towards that and opening that up. What's going to happen with outside the current exchanges that are out there? We'll see if that's going to affect their situation. So the discussion right now is that a lot of these options, a lot of these crypto assets will still have to go through some kind of SEC approval, SEC audit to make sure that they're safe and secure, and it's going to make sense for the American investors. Definitely, that's something that's going to be impactful on in the 401k side. Then we have the FDIC. So I haven't seen anything about the FDIC, but this is also something that they're going to have to think about. This is the FDIC is obviously the deposit insurance. Then we also have the executive order that we just talked about, and that's really, again, kind of setting the direction for what they want to do with crypto in 401k. Is your money at risk in all this? And how can you make sure, can you take advantage of this? How can you make sure that you stay safe when you're investing in crypto? So you can invest in crypto as long as you do it safely and prudently, and I would say logically. You don't want to be too emotional. A lot of people have reached a certain age, maybe you're 55 years old, you have 10 years before retirement, and you look at your 401k and you say, oh, I have $150,000 in my 401k. There's no way I'm going to be able to retire in the next 10 years. So here's what I'm going to do. I'm going to invest like a maniac in cryptocurrencies, take undue risk, and then see if I can make up the time and catch up for all these missed opportunities. Definitely not something that you want to do. If you decide to invest in crypto, I would recommend that you keep the allocation below 5% of your total assets under management. And if you do invest, then focus on things that are pretty safe still, like Bitcoin, Ethereum, and other proven projects. Stay away from highly publicized projects, maybe, or cryptocurrencies. I would definitely stay away from meme coins, because crypto is still not all cleaned up. There's still, maybe 80% of the crypto projects and crypto coins out there are kind of a scam. So crypto has a long way to go to be cleaned up, and the American government doesn't have control of the whole crypto environment, the whole crypto industry. There's a lot of other foreign players that are in there, and you just can't control them. It's impossible to control them. So you have to stay alert and make sure that you stay safe and you invest prudently. What do you do with the rest of the money? Well, you want to invest in diversified asset classes. That means asset classes that are going to move in different direction than what you're investing in. So I would recommend other asset classes that are outside. So real estate rental is definitely something that I would recommend. This is a completely different asset class with strong leverage, intrinsic value, etc. So make sure that you look at that and put a portion of your portfolio on that. I think that's very important. Then regular stocks is also something that you want to do. But when you're looking at your allocation in crypto, you want to look at things that you may already be exposed to crypto, right? So you may already have ETFs that have crypto components in it. You may already have a mutual fund that has crypto components in it. We also have, as I mentioned earlier, there are companies out there that have a significant amount of money in crypto, in Bitcoin, namely, on their balance sheet. MicroStrategy, it's called Strategy now, but Strategy has $70 billion of Bitcoin. This is $70 billion. They're not a Bitcoin company. They're a business intelligence software platform. So why are they having so much money in Bitcoin? It doesn't make a lot of sense. And this is also why it's so important. Like, there are connections, if there are too many contacts or connections between the stock market and the cryptocurrency, when one of them is going to crash, if the cryptocurrency crashes, let's say, instead of 120 like it is now, let's say it goes to $1,000. You know, what's going to happen to MicroStrategy? Instead of $70 billion, now they're going to have $70 million. That's a significant drop in value. So imagine what it's going to do to the stock market. So Tesla is also another one that has a significant amount in Bitcoin, about $1.5 billion. So you may already have exposure to that. Make sure that you double check. As I said before, I mean, the situation is moving fast, very fast, and these changes can really affect your financial future. So you want to make sure you stay informed, hit the like and subscribe button, and see you next time.